Market structure in trading refers to the framework of price movement and its key elements. Let us first discuss what are the key elements. There are only two key elements, highs and lows. Let me explain it on the chart. Let us consider this particular portion of an instrument. In that instrument, it is very simple. This is a low, this is a low, this is a low. Whenever price is going up, then coming back down, then again going up, it is creating a low. Higher low, lower low, we will discuss later. But this particular thing is low. Similarly, this is a high. It is coming back down, then going up. This is another high. On this chart, particularly, this is a high, this is a high, this is a high, this is a high. So it is very clear whenever price is moving in any direction, it is changing its direction for some time. When doing so, it is creating a high or low. Now, there is a particular characteristic of a swing high or swing low. It is a three candle pattern. First candle has to be smaller than the in between candle of the three candles, and the third candle has to be smaller than the second candle. It is for a high. Similarly, for lows, the second candle has to be lower than the first candle, and the third candle has to be higher than the second candle. This is the most basic explanation anybody can give you for simple high and a low. Now let us go a little bit deeper. There are three main core components of market structure. First one is swing highs and swing lows, the three main core components of a market structure. Number one is swing high or low. Swing highs and swing lows define market structure. Rules are very simple. Whenever market is making higher highs and higher lows, market is in uptrend. This is a higher high, this is a high, then this is a low. Now this high in comparison to this high is a higher high. Similarly, this low is in comparison with this particular low is a higher low. So whenever market is continuously making higher highs and higher lows, market is in uptrend. Similarly, when market is making lower lows and lower highs, market is in downtrend. This is a low, this is a high, this is a lower low, another lower high, lower low, another lower high. This particular price action segment is downtrend. Let me give you this example on live market chart. So this is a high, this is a low, this is a high. This is a lower low, lower high, another lower low, another lower high, another lower low. In this particular segment of price action, the market was in downtrend. Now let me give you the example of an uptrend in a live market chart. So this is a high, a higher low, high, higher low, another high, higher high, and higher low, higher high. So during this particular segment of market trading, the price was in an uptrend. You see the equal highs and equal lows during this particular segment of price action. During this time, market was ranging, or you can say market was consolidating. Now, once we have understood swing highs and swing lows, let us understand the second core component of market structure, support and resistance. Some call it order block, some call it demand supply. We will keep it simple. We will call them support and resistance. So in this particular chart, you can see this particular area is a resistance zone, and this particular area is a strong support zone. So whenever price comes near to the support area, buyers come in, and whenever price goes to a resistance area, sellers come in. Similarly, after tapping into the support area, price start to raise sharply. So how we can trade it? Buy at support, sell at resistance. Now let us discuss about the third core component of market structure, that is market structure shift. This happens when price start to break the structures in opposite direction of current trend. So for example, we can identify that from this particular area to this particular area, market was in downtrend. But after some time, instead of making lower lows, market has started to break this previous structure. So it means market is trying to reverse. Hence the name, shift in market structure. So previously market structure was bearish. Now market structure is shifting towards bullish direction. Now we have understood three core components of market structure. Now let us discuss how we can take advantage from it and how to trade it. What strategies we can use to trade it. So my first strategy is liquidity pool and order flow. Now first we have to identify what is the order flow in this particular price range. In this particular sample of price segment, we can easily identify market is making higher highs, then another higher high. Since we have identified that institutional order flow is bullish, now we have to identify where the liquidity lies. In order to understand where liquidity lies more, let us understand where the orders are. Normally, when the retail traders see a trend forming, they start to place their orders on the third or fourth touch of the trend line. So this particular is the third touch of the trend line, and their stop losses will be below these structure points. So this is a liquidity pool area. We can take our buy order from here and our stop loss here. So the retail traders will become our liquidity. We will enter here and the market will shoot up. Market often takes out retail stops before reversing. Don't get caught. The second strategy which you can use to trade this particular price action is pullback and trend continuation. So we have identified this particular trend in an uptrend. So our pullback will be at least 50% or below. We can enter in any support zone which is coming below 50%. So this is a 50% support zone. During the trend pullback happens, remember, patience pays. Wait for a retest to jump in. Now you have understood everything in structure. Let us put it together. So here is my step-by-step trading plan using market structure. Number one, identify trend. High time frame is very good. Then we can trade on lower time frame. Mark key levels. Again, the key level should be on high time frame. Wait for pullback and retest. Enter on confirmation. Confirmation means you can see a lot of different things. You can see type of candle forming, you can see volume divergence, you can see RSI. You can use those indicators here, but just for a support. Now practice, practice, practice. Market structure is the blueprint of price action. You will start to see market very differently. If you found this helpful, please smash that like button, subscribe. Now for the bonus part, I have pinned a comment and also in description I have attached a link with which you can download my cheat sheet for market structure. These cheat sheets, which I am developing now personally, have been very helpful for me in my past and in my current trading also. With this cheat sheet, my emotional drama can get aside and I can focus more on my trading. So it will help you. In order to download that cheat sheet, system will ask for your email address and name. By entering your email address, you will send your email address to me and I will send my cheat sheet to you and we will remain in touch.